Well, we are seeing crude setting to finish off what has been a very choppy week as investors look ahead to earnings from the oil majors. Given growing supply risks in places like Libya and recession fears, though, the question is where price is headed. For more on that, let's bring in Mohammad Darwazah. He's Senior Analyst of Macro Energy at Energy Aspects. Mohammad, good to talk to you today. I want to start with the demand that we've been looking at over in China. Of course, we started off the week at the Party Congress that's now wrapping up, and the expectation was maybe we'd get some signaling on whether, in fact, China would sort of back off on the zero COVID policy, which has led to a lot of concerns about the demand coming out of there. What do you see in terms of how things are likely to shape up in the next few months?
Yeah, thank you for having me. I think you're absolutely right. There maybe had been some expectations building up that post-Party Congress, China would start moving away from zero COVID. I think what has been clear is that actually a lot of these lockdowns have come into effect ahead of the Party Congress in anticipation or sort of expectation that policy will begin to shift over the next sort of 3 to 6 months. I think the market is now kind of caught up with the view that this is unlikely to change imminently, but I think going forward, there is an expectation that COVID rules are going to begin to be relaxed. China has been somewhat absent from the buying cycle in crude markets over the past year or so, and I think once China does come back, this is going to be certainly a bullish factor.
The next marker a lot of investors certainly looking ahead to is in December when we see those sanctions come down on Russian oil. We're looking at where prices are tracking today. It certainly looks like at least some of those recession fears have subsided a little. How are you looking at where things are right now, if we're talking Brent crude at 92.88, in the context of what's to come?
Yeah, absolutely. I think obviously a lot of uncertainty going into year end, and this has kind of cast sort of a cloud over the market. The EU embargo on Russian crude and products that's set to come in December of this year and in February of next year, I think ultimately will have a significant impact on Russian production. We expect Russian production to drop by an average of about 1 million barrels a day, sort of by the end of Q1 of next year. More generally, I think prices will be capped going forward because of demand fears, because of concerns around recession. We are expecting quite a deep recession in Europe, a much sort of shorter and a shallow one in the United States. And I think, ultimately the X factor here is really China.
So much of the concern in the oil markets have been shaped around the supply concern. You mentioned demand concern. Is that what's going to be driving prices going into year end? And what are some of those risks that we're overlooking?
Yeah, I mean, supply, I think the market does spend a lot of time looking at supply. Supply is constrained. This is a structural issue. I think people are coming around to that view. Demand, I would say, is a lot more sort of divergence in the market in terms of expectations. And, in times of recession, we tend to see commodities in late cycle sort of sell off. And this is no different. But when we look at sort of the highs of the year, we have come off and we're about sort of 20-ish% from this year's highs.
Okay, we'll be watching. A lot of people watching to see where those prices track. Mohammad Darwazah, Senior Analyst of Macro Energy at Energy Aspects. Thanks so much.